All right. Now we have a lot of candlestick. We have the morning star, we have the evening star, we have the hammer, we have the angima. There are a lot of them. Okay. Now I don't want to make this course to be so long, but we have understood the principles behind it. The principle I gave you in these lectures applies to all candlestick. So when you get the book, you have detailed written understanding about these various candlestick, and with this practical knowledge it will make more sense to you. That is why I say that you need the theory and you need the practical, so that you can have a solid foundation about candlestick. Okay, so you can have a solid foundation. Now, okay, look at this candlestick. Just look at this now. Let's look at this candlestick. Now, this is a different kind of candlestick. Okay, now if you check, the same principle is applied here. You can see the same principle is applied here. The highest price, the lowest price, the body, the open and the low, the same principle, even though the candlestick formation is different. Okay, let me open another one. Now, this is another different kind of candlestick, but the same principle applied. The highest price, the lowest price, the closing price and the opening price and the body. So that in this case you have longer wick downward, which signifies buying pressure. If this candlestick is being formed on a support level, if the candlestick is being formed on a support level, it signifies, it shows you that the buyers are in charge because of what? The strength of this rejection, the pull up by the buyers, meaning that there was a time the sellers took the market to this level, but strong buying pressure came into the market and reversed the market to this level, and the market closed above. Now, but if you see this on a resistance level, ignore it. Okay, let's look for it on the chart. Now, you know, I told us sometimes that the color does not matter. I told us from the beginning of this course, the color does not matter. Now, look at this candlestick. It's giving you blue, telling you that yes, if we are going by the color, that once it's blue is bullish, once it's red is bearish. If we are going by the color, so many traders would have bought here because it's a blue candle. But this is a bearish candle. This blue candle, this candlestick you are seeing now, showing blue, is a bearish candle, even though the market closed above where it opens. As you can see, the market closed above where it opens. But yet, this is a what? Is a bearish candle. This is a bearish candle. Because of the what? The level of rejection. 1 and 2. It is forming on a resistance level. That's why I say that don't just move by the color. Understand the principles and understand the relationship between support and resistance, between candlestick, between chart pattern. You must understand how these things relate. Now, I've showed us how support and resistance and candlestick relate when I give you the principle that only buy on a support level and sell on a resistance level. That is their relationship. So now, with that in mind, you should not have business with buying at this level. Okay? Now, in this lecture, we'll be looking at support and resistance in this particular session. But I just wanted to do a little recap of our candlestick, and also to let you know that with the principle you have learned, you can easily understand any kind of candlestick. any kind of candlestick, whether Marabuzu, the Marabuzu candlestick are those candlesticks without wick. They are very strong buying and selling candlestick. Now we have the bearish Marabuzu, we have the bullish Marabuzu. Okay, now the same principle apply. When you see that bearish, big bearish candle without wick, Marabuzu have no or little wick. When you see a very strong bullish Marabuzu candle on a support, it gives you a strong buying pressure. Now, the fact that there was no wick to the opposite direction is a sign. It's a sign that that candlestick is very strong, and the buying or the selling pressure is very strong at that particular time frame or that particular candlestick, that moment. So now, when you start going through these books, you will start understanding what I'm saying better. Okay, so you must study the candlestick, spend time, open several charts, try and locate these things, try and locate them on your chart, understand them, know how they move. You can even open a live chart, put it on 1 minute time frame, just be watching how the market moves. How the market moves, put it on 1 minute, just be looking at it, and it will marvel you how easy forex can actually be if you have a good foundation. Now let's look at support and resistance briefly. Now if you look at, okay, let me remove this. Let me remove this. Now, let's go to our slide. Let's look at what support and resistance is. Now, support and resistance are fundamental concepts in technical analysis that are like the floor and the ceiling of price action. Support is a price level where downward price movement tend to stall because of a concentration of demand. Resistance is the opposite, a price level where upward movement tends to stall due to a concentration of supply. Understanding support and resistance can help you identify potential entry and exit point for your trade. When price approach a support level, it might be a good time to consider buying. As price near resistance, it could be an opportunity to sell. I've explained this. Okay, but let's look at the charts, because one thing about practical, it makes the theory look more easy to understand. Now let's go back to the chart. Okay, now talking about support and resistance, according to what we read from the slide, it's like the ceiling and the floor of our chart. Now let's just draw some support and resistance here. Okay, now let's start from this floor. Always start from the outside of the charts. Let's start from this floor. This is a support. So this is the floor. Now let's locate the resistance. Now, how do you locate resistance? You look at where the market have rejected from, at least minimum of twice, but the more the better. And let's check. The market rejected from this level. Okay, the market rejected from this level. This level. Market rejected from this level. This particular, you see this weak rejection. The market rejected from this level. There's another one here. Market rejected from this level. Okay. Oh. From this level, from this level, from this level, you can see rejection, 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 rejection. Now, with this, I can decide to put my resistance level around this place. Around this place. Around this place. Okay? Now, if this is my support, that is the floor, then this is my resistance, which is the ceiling. But there is one key principle you must understand. When a support is broken, it automatically turns a resistance. And when a resistance is broken, it automatically turns a support. Let me explain. If this is our support and this is our resistance, this is the floor, this is the ceiling. Just like in your house, the floor where you are standing on is the support, the ceiling is the resistance. Now, this market broke through the resistance. Immediately the market broke through the resistance, this place that used to be a ceiling is now the floor. When the price came to this level, now because the price is now above the level, it now becomes the floor, which is the what? The support. It's just like if you break through your ceiling, break through the roof, you are now standing on top of the roof. Automatically, that roof is now the floor. Please, I'm not saying you should go and break your ceiling, okay? It's just an illustration. All right. Now, because you are standing on top of the roof, the roof will become the floor at that moment. You get the concept? Now, this market broke this resistance and it became what? Support. Now, we have to look for the next resistance, which is what? This is the next resistance where the market reacts from more than once. You can see this is a reaction here. You can see this weak candle reaction, another reaction, another reaction, another reaction. So now this is what? Your new resistance. And this is now what? Your new support. Now this one is already gone. Unless the market comes back to this level, you don't have much business with this level until the market is coming back to that level. Don't focus on any level that the market is far from. Unless the market is coming back, if the market is coming back to that level, that is when you can focus on that level. Okay. Now, what happened again? This same resistance was broken. This big candlestick broke this level. Immediately it broke this level, automatically this is now the floor. This automatically turned what? Support. Now we'll now look for the next resistance, which is somewhere around here. Why is it here? There's a little reaction here, a little reaction here, a little reaction, and a little reaction here. Now you must in during your support and resistance, it must not be exactly, but any area that is close. Like if you check very well, this level is not very, very close to this particular level. But if you check, they are all on the same zones. They are all on the same. So I can expand this to be like this. I can expand it to be like this. This is my support zone if the price is at this level. Now if you check what happened, the market broke through this level again and automatically it became what? Support. That is how you follow the market. That is how you follow the markets. So this can be the next resistance level. And what happened? The market broke through it again, retested it, and two, the market cannot exist without support and resistance. When a support break, it becomes resistance. The market cannot exist without these two things. It cannot exist. So that is why it's very, very important to understand this concept. And it is very, very important to understand how this support and resistance relates to candlestick. Now let me just give you an example. Let me give you an example from what we learned from candlestick. The market broke this level, came and retested it. Now this is now your support, so you should be looking for only buying opportunity when the market is at this level, because it's your support. Okay, now the market now broke and this place became support again. You should be looking for only buying opportunity because the market is now on a support level. The same thing as it broke, retest. Always wait for retest. Now we might not be able to talk about retest in this particular session. If the market break through a level, always wait for the market to retest back that level. Very, very important. If you don't follow this rule, you will enter trades too early and you will be easily fake out. Okay, let's see if we can see example of the bearish market. Now, okay, let's start from, let's say this is our resistance. This is our resistance level. Now, the best way to actually draw support and resistance is to use your line chart. Okay, is to use your line chart. Okay, I may go into that later. I will explain that concept for you. Now, this is, let's say this is our resistance level. Okay, now using the same concept, this could be our support level. Okay, now what happened? The market broke through this support level. This big candlestick broke through the support level, and the market went down, came back and retested it. Came back and do what? Broke through this big this candlestick, came down and retested it. Now, if I want to trigger a trade, this would be my entry candle. At the close of this particular candle will be my entry, but we're not talking about entry in this session. So now, immediately this support level break, it became resistance. The same principle that was applied to the support level applied to in the bullish market. The same principle that is applied to the bullish market is also applied to this bearish market, this particular level. Now, once it break, retest, it forms resistance. Okay, let's do another example. Now, if this became our resistance, we have to look for what? The new support, which is this level. The market broke through it again, retested it, and this new support became what? Resistance. Now, once the market does that, you look for the next what? The next support. Now, do you know why you should keep looking for the next support? Because your profits, take your profits at the next support or resistance level. What do I mean? If this market break and retested and this is your entry, your take profit level will be at this level. Let's say you entered at this level, your take profit should be at this level. If you enter by this level, at this level, if you enter at this level, your take profit should be at this level. Always take your profit at the next support or resistance, depending if you are buying or selling. Don't assume that the market will break through a support level. Like maybe because we are seeing a very big bearish candle, you say, okay, let me leave. The market is going to break through it and it will keep going down. No, take your profit from this level and wait for the market to break and retest again before you enter. Now, because look at what happened. The market rejected and went back. As you can see, the market went back and start going back upward. That is why you must take your profit at the next support or resistance level. Very, very, very important. Very, very, very important. Now, this is the concept behind support and resistance. Okay, now let's look at, let me show you one easy way to draw support and resistance, but we are going to do that in the next lecture. Okay, see you in the next lecture. Thank you.